You're watching The Close. Let's get to the airline industry. After launching less than 2 years ago, Calgary-based Lynx Air has announced it is ceasing operations. The low-cost airline says despite growth in business and even exploring a possible sale or some kind of merger, challenges have been too significant to overcome. We wanted to get some perspective now from a longtime airline executive. Duncan Dee is the former COO of Air Canada. Duncan, it's nice to have you back with us here on BNN Bloomberg. What was your reaction when you heard these headlines?
I would say I wasn't particularly surprised, but a little bit shocked that it was Lynx that succumbed to the financial pressures that they were facing. I think for quite some time now, in fact, it was Michael DeLuce, the CEO of Porter Airlines, who said back in December that he expected at least one of the ultra low-cost carriers to go under within the next 2 years. Well, here we are, and already one ultra low-cost carrier in Canada has gone under.
And what ultimately do you see as the factors that got us to this point with Lynx specifically?
Look, I think it basically is a question of them running out of cash. You know, we're in a situation in this country, unfortunately, with things like foreign ownership rules and restrictions, which prevent airlines like Lynx from raising cash outside Canada's borders. And as many of your viewers know, the capital markets in Canada aren't particularly friendly to these types of opportunities. And so Lynx was unable to find deep enough pockets to withstand the weak shoulder season. You know, air travel in Canada is extremely cyclical. It's extremely seasonal. There's one major peak every year, which is the summer peak. After that summer peak, most airlines go into some degree of survival mode, where they're really looking just to be able to cover their costs and, you know, live until the next peak, which in many cases after summer is around Christmas time. And then after Christmas time, it's around the spring break period. But outside of those very small, narrow windows of travel peaks, most Canadian airlines are really looking hard to try to make ends meet.
And what does it say about the ability at the end of the day for Canada's airline industry to have more competition if we've got a company like Lynx that can't make a go of it?
Look, I mean, I think that the Canadian airline graveyards are filled with airlines just like Lynx. You know, many viewers will remember Canada 3000, CanJet, Jetsco, Greyhound Air, and, you know, the list goes on and on. You know, in terms of the state of competition in Canada, unfortunately, unlike in Europe, in the United States, or in Asia, the Canadian marketplace is just not configured for ultra low-cost carriers like Lynx. When you've got these fixed ancillary fees, charges, and taxes that are tacked on top of the base fare, it's impossible in Canada, for example, to see fares like the 2 or 3 or 5 pound fares between London and Edinburgh. Or, you know, the fare I took last week between Kuala Lumpur in Malaysia and Jakarta, Indonesia, which was about 23 Canadian dollars. You know, when your airport improvement fee alone on every single ticket is somewhere in the vicinity of $40 to $45, and then you've got all the other hosts of charges and taxes on top of that, you end up in a situation where airlines are unable to stimulate new traffic. And so they're fighting with the established, long-standing carriers like WestJet and Air Canada for their piece of a pie that isn't growing as fast because of the lack of stimulation.
And, you know, at the end of the day, do you anticipate that there will be more change in the industry then based on what has happened in the Lynx situation? You alluded to the comments from Porter. Would you anticipate the possibility of call it further consolidation or other smaller airlines not being able to make it through this?
Look, for quite some time now, folks within the industry were anticipating a shoe to drop in terms of one of these new entrants, you know, closing up shop and ceasing operations. The only surprise was that it was Lynx, because most people felt that Lynx had a seasoned management team and quite a focused investor behind it. But, you know, in the case of other players in the market, you know, there have been widely reported financial pressures that, for example, Flair Airlines has faced over the last little while. And so, you know, I think that, you know, stay tuned. And I think Michael DeLuce, the CEO of Porter, had it right. I think that we've got a situation in Canada where some of these players aren't going to be around for very long.